Hey, welcome back to the Pastoral Finance Podcast. I'm Todd Huckel, and this is episode 8. Hey, last week I asked you to write down 2 numbers: what your church believes it provides you, and what actually gets to your house and stays there. And I said the space between those 2 numbers, that was where the real conversation needed to happen. This week we close it, and here's the part that I like. Nobody's pay has to change for it to work. So let me tell you about a pastor I know. I think some of you are going to recognize yourself in him. He drives an older pickup, runs it hard, hospitals in the country, funerals never less than an hour away, a widow who needs a ride to a doctor's appointment because her son lives in Ohio and he can't get down here. 19,000 miles on that truck in a year, and a good chunk of it was church business. He paid for every mile of it himself and never really thought about it, not because the church said no. Honestly, it just never came up, and bringing it up felt small. Maybe that's you. Here's what he assumed, and I'll bet a lot of you may even assume the same thing. He figured it all evened out at tax time. He'd just write it off. He can't. Not anymore. A few years back, the tax law changed. Unreimbursed employee business expenses came off the table as an itemized deduction, and they have stayed off ever since. So a pastor who's a W-2 employee of his church, and that's most of you, gets nothing back on his income tax for $1 he spends doing ministry. And can I tell you what I see all the time? Pastors still keeping the receipts, doing the right thing, staying organized, glove box full of them, waiting on April. That stopped working a good while back, and nobody sent out a memo. I bet some of you have a stack of them in your truck right now. 19,000 miles. Real money out of your household, and there's no line on the return where any of it comes back. Now, here's where ministers get hit twice. You do have some income where ministry expenses can still be counted. Weddings, funerals, honorariums, outside speaking, that gets reported as self-employment income, and expenses can offset it. So far, so good. But you don't get all of them, and the reason why is your housing allowance. Here's how the IRS looks at it. You can't take a deduction for expenses that are tied to income that was never taxed in the first place. That would be taking a break on the same dollar twice, and your housing allowance is generally excluded from federal income tax. So if part of your ministerial compensation is coming to you tax-free, that same share of your ministry expenses gets knocked out. That's called the Deason rule. It goes all the way back to a court case in 1964, and the courts have held the line on it ever since. Let me explain what I mean. Say a quarter of your ministerial compensation is housing allowance. That means roughly a quarter of your ministry expenses aren't usable to you. You didn't do anything wrong. That's just how it works. The first time I learned that, it stopped me. Sit with where that leaves a pastor who's paying his own way. The single best benefit in your financial life, the housing allowance, the thing we spend whole episodes on around here, is quietly working against you on the expense side. There's no clever way around it either. But there is a way to make it not matter. Stop paying for it. Not stop doing the ministry, stop paying for it personally. When the church reimburses a ministry expense the right way, it never becomes your income at all. There's nothing to deduct because there's nothing being taxed. The problem doesn't get solved so much as it never happens in the first place. That's an accountable reimbursement plan. And I want to be careful with the name because it sounds like a benefit and it really isn't one. It's bookkeeping. It's the church paying its own bills through the right door. Here's the question for your board. Where's that money coming from right now? It's coming from you. Every dollar of it. The church is already spending it because you're spending it on the church's behalf. So routing it correctly doesn't cost anybody anything new. Those dollars are already going out the door. They're just going out of the wrong account. Here's where churches get nervous. Somebody says accountable plan and everybody in the room pictures paperwork and an auditor. It really isn't like that. There are 4 basic rules. Follow them and you're fine. First, it has to be a real ministry expense. Mileage to the hospital, the conference, books, the meal with the couple you're counseling, church business. Second, you turn it in and there's a clock on it. What you spent, when, where, and what it was for. The tax rules treat 60 days from the expense as reasonable. So put 60 days in your policy and quit guessing about it. Third, if the church advanced you money and you spent less than that, you give the difference back. 120 days is the window everybody uses. Keep it and it turns into wages. Fourth, the money comes out of the church's budget, not out of your salary. That fourth one is where good churches go wrong. So give me just a minute on it here. Here's how it sounds in the meeting. Well, we've got the pastor at 70. Why don't we call 60 of that salary and 10 of it as reimbursement account? Everybody nods. They feel like they've solved something. And this catches a lot of churches because there's nothing mean-spirited about it. It sounds efficient. But that's a salary reduction and it isn't an accountable plan. You're still paying for ministry with your own money. The only thing that changed is which line it sits on the church's spreadsheet. A real plan is money on top of your pay, not carved out of it. Your compensation stays exactly where it is, and ministry expenses come out of the ministry budget, the same as the power bill and the copier lease. And if somebody says the church can't afford that, listen to what's actually being said. The church can afford it. It's already being afforded. You're just the one paying for it. There's a version of this that looks like a reimbursement plan and isn't. And I run into it constantly. It's the flat monthly amount. $400 a month for ministry expenses, right in the check, no receipts, nothing turned in. That's a car allowance wearing a nicer name. No substantiation means it's taxable wages, and it belongs on the W-2. A whole lot of churches are doing that right now and reporting it wrong, and every one of them thinks they're being generous. The other one shows up in December, and it's the one that hurts to talk about because it comes from a good heart. There's money left in the reimbursement line, and somebody says, let's just bless the pastor with the balance. Don't do it. Paying out unused funds can taint the arrangement, and depending on how the policy is written, reimbursements the church made earlier in the year can end up being treated as taxable wages. A kind gesture at Christmas can undo 12 months of doing it right. Unused is unused. It stays in the church's account and everybody sleeps fine. Step back for a second and look at this from the board's side because it's good for them too. Right now, if you're absorbing ministry costs, the church budget is telling everybody something that's not true. It says ministry costs less than it does. The mileage isn't in there. The books aren't in there. That conference isn't in there. All of it is hiding inside a pastor's household budget where not one board member can see it. Put those costs where they belong, and the church finally knows what it actually costs to do what it does. That's not a burden on a church. That's a church getting honest numbers to plan with, and every board I've ever handed honest numbers to has been glad to have them, even when they were bigger than expected. Now, in practice, it's one line in the ministry section of the budget, funded like anything else, with a written policy sitting behind it. And the policy doesn't get filed with anybody. The church just has to have one, adopt it, and actually follow it. If your church is building a budget from scratch or cleaning one up, I put a church budget template out there at pastoralfinance.com. It's free and the lines are already in it. Same framing as last week, and this one's easier than asking about pay. You're not asking for money, you're asking the church to pay its own expenses out of the right account. It might sound something like this. I've been covering some ministry costs personally, and I realize the church doesn't have those numbers, so our budget isn't accurate. I'd like us to adopt a written reimbursement policy so the expenses run through the church the way they're supposed to. And I'm not asking for a change in my compensation. That last sentence does more work than the rest of it put together. Say it and mean it, and bring a draft with you. Don't hand a board a problem and ask them to go research it on their own time because you know exactly what happens then. It sits for 6 months and somebody mentions it again next budget season. Hey, network offices, church tax publishers, most CPA firms that work with churches, they all got sample policies. Get one, adapt it to your specific needs, walk into your board meeting with it, ready to adopt it. I know, receipts. This is where good men quit, and I get it. Nobody went into ministry to file expense reports. But look at what that 60-day rule is really asking of you. Write down what you spent while you still remember why you spent it. That's really all it's asking: a photo of the receipt and a note about the purpose the day it happens. Hey, there's a verse in Proverbs I think applies here. Know well the condition of your flocks. Give attention to your herds. That's about paying attention to what you've been put in charge of. Counting isn't a failure of trust. Counting is how a steward knows what he's stewarding. And you already do this. You know the attendance trend. You know which family hasn't been back in 3 weeks. You count everything that matters to you. So count this too. Back to that pickup for just a second. 19,000 miles. You remember it? No deduction coming. No fix waiting on the tax return. But every one of those miles was reimbursable, and the church had the money because the money was already leaving the building. It was just leaving out of his account instead of theirs. So if you take one step this week, just ask one question. Does our church have a written accountable reimbursement policy? That's it. Not whether the church reimburses things sometimes, whether there's a written policy adopted on file. If nobody can hand you a written policy, there's a good chance you don't have one. So start there. You may find your church already has one sitting in the files. And if they don't have one now, you know what the next conversation needs to be. Hey, one more thing before we go. I said it last week. In fact, by the time this airs, it may already be out. I've got a new book coming out. Don't bury it. It's short on purpose. It's for the pastor who's been meaning to get started on this for the last decade or so. And I'll let you know again when it does become available. Hey, and the usual reminder. Hey, this show is for education and encouragement, not personalized financial or tax advice. Reimbursement rules have real details in them, and your situation has details in it too. So talk it through with somebody who knows clergy taxes before you act on any of it. Hey, thanks for spending time with me. I'll see you next time.